Hello everyone and welcome back to Financially Fluent. I am your host, Jacqueline Mutuma. In today's video, we are going to take a look at the next investments, and those are treasury bills and treasury bonds. The first thing to understand about these investments is that they are both government securities. That means they are both backed by the government. And so what is the main difference between a treasury bill and a treasury bond? A T-bill is a short-term government security. So we have three types of treasury bills. That is a 3-month or a 91-day treasury bill. We have a 6-month or a 182-day treasury bill, and we have a 1-year treasury bill or 364 days a T-bill. So they are divided into three: 91 day, 182 day, and 364 day T-bill. So that is a treasury bill. For a treasury bond, it is also a government security, but it is a long-term investment. So we are talking about 1 to 30 years. So the minimum or the lowest treasury bond starts at 1 year, and the maximum treasury bond is for 30 years. So that is the main difference between a treasury bill and a treasury bond. One is short-term, the other one is long-term. So why is it a good idea to invest in these government securities? The first thing is that they are safe, and that is simply because they are government backed. Okay, and then the second thing is that it has a predictable passive income. So how a treasury bill works: you purchase the treasury bill at a discount, and then when it matures at face value. Let's say, for example, you purchase a treasury bill worth 100,000. You'll purchase the bill for example, 97,000. But when it matures, if it is a 91-day T-bill, it will mature after 3 months. When it matures at the face value, that is 100,000. That means you have 3,000 profit out of your treasury bill. And for a treasury bond, how it works is that when you purchase a treasury bond, every year in 2 rounds, you're given interest. So if the treasury bond is, let's say, for example, 10%, and you purchased a T-bond of 100,000, so that means the interest per year, per annum, is 10% of 100,000, which is 10. Is it 10,000? Yes, which is 10,000. All right. So that 10,000, you're going to be given that interest twice in an year. That means you'll be given the first 5,000 after 6 months, of which they are called coupons. Okay, you will be given the first 5,000 after 6 months, and then the other 5,000 after 1 year. That is at the end of the year. In short, by the time, if let's say, for example, this T-bond, you had taken it for 5 years and you've been earning 10,000, that is 10% of 100,000 every year, paid out twice, after 6 months and after an year, the next 6 months. So after 5 years, you'll have gotten coupon or interest of 50,000, and then also after that 5 years, when your bond matures, you're given back your principal. That is the amount of money that you invested into the treasury bond, that is 100,000. So you'll have made a profit of 50,000 out of your treasury bond of 100,000. I hope I'm clear on that. Okay. And then the other reason that you should invest in these government securities is that they have an affordable entry limit. That is the capital you can start with as low as 50,000 for a treasury bond. The treasury bills usually start at 100,000. That is the minimum amount. And then we also have tax-free options. That is for the bonds. So we have bonds that are known as infrastructure bonds, and the IFB bonds, they are tax-free. So that means if this bond is going for 17%, you get your 17% clean money without it won't have any tax deductions. So that is an infrastructure bond, and they are very good. Okay. And so if you want to start investing in these government securities, how are you supposed to approach that? The first thing you need to do is open a CDS account. And actually CBK has made that is the Central Bank of Kenya, has made this very easy for all of us investors. That is because right now there is a mobile app which you can get on your Play Store or on your App Store. And the mobile app is known as DhowCSD. I don't know how to clearly pronounce that word, but I'll leave it at the description. Yeah, there is that app that you can download, and then you're able to open up your account and fill out all the details that you're required to fill in. Just know that you'll have to provide your details such as your ID, your KRA PIN, your bank details, a passport photo, those details that are usually very necessary whenever you are like opening a bank account, or yeah, those very important details. You'll have to provide them when you're opening up a CDS account. After your account is fully set up, the next thing you have to do is just keep on checking the CBK website for when these offers are being auctioned, the treasury bills and the treasury bonds. Like for example, I'm making this video on the 9th of May. So yesterday, the 8th of May, there was a treasury bill and treasury bond that was actually being auctioned. And so yeah, the next one will be sometime in June. I don't know if it's 12th of June, but you can just check the central bank website. The T-bills and the T-bonds are usually auctioned, and then after around 3 or 4 days, then the value date is being set. That is the day when the investors have to actually pay for the treasury bill and the treasury bond that they have purchased. So yeah, that is it for today's video, guys. If there is anything that was unclear, if there is anything I did not bring out quite well, or you did not understand, just be sure to leave it in the comment section. I'll take a look at it and I will get back to you. With that, yeah, bye.